You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Hi, Jim.
People are wondering, what should I do right now? We had a nice little gain in gold and silver last week. Does that mean we should start kicking a lot more money that way?
I'd say that the best thing to do right now is not a whole lot. I like to quote my one of my mentors from long distance from the 1970s, Stanley Kroll, who said, "Be right and sit tight." And so at this stage, after we've seen a pretty good run-up over the last week or so, it's easy to want to kind of get involved in the action and do as much involvement as the market is. But I'd suggest that if you have your positions, watch them. If you don't have as much as you'd like, buy only into weakness, and we've talked about this so many times. And then also another thing that helps me too, to keep from getting caught up in all the noise, if I decide to buy more, I look at that and then I cut it in half for that position. And this way I'm not adding too much into strength. And even if we have prices go down here a little bit from where we are, it's still, on a lot of the miners, is quite a bit higher than it was a couple of weeks ago. So there's just no point in getting carried away. And if you don't have a position, well, I guess you're just going to have to figure out how to wait for the weakness to come, because we've certainly been talking about it long enough, and you should have had something by now.
One of the analysts I talked to thought perhaps gold could rise another $100, $150 this year. But a little early to jump in on that?
Well, I think he's probably right. In fact, he might very well be not optimistic enough. But you can't force the market to do what it wants to do ahead of time. And again, if you buy into weakness, and if you buy in several tranches, no matter what's going on, I think you're going to feel better about it when prices make those inevitable turns and back and fill. Because I'll tell you, it's been great looking at my account over the last few days and seeing almost nothing but green. But it also kind of puts a pit in your stomach when you get a couple down days and everything is red again. So, it's just a matter of trying to dial back that emotion so that you don't get caught up in it, but yet you can still participate from a reasonably calm space.
Now, earlier in the spring, I seem to recall J.P. Morgan and some of the other big banks saying, oh, no, gold and silver, they're going to go down this year. Are they just trying to chase people away?
Yeah, everybody has an opinion, and you have to decide where you are on that, and that's why, I keep talking about the big picture. If you don't believe in the big picture, that we have a bull market that's reasserting itself, then your behavior is going to be running counter to that eventually. So that's why I think it's important. You don't have to be a perma-bull or a perma-bear, but you have to decide what your belief structure is, and then by and large try to behave in regards to that, so that there's a pretty close alignment to what you believe and how you behave.
The Dow Jones has flattened out. Perhaps the S&P and other markets might be heading up just a little bit more, but in comparison to the Dow, the TSX has really been rising the last little while, and gold is giving all the credit for it.
Well, certainly that's been the trigger for it, but the mining stocks themselves have really started strengthening a week or so before this rise got underway with the physical metals themselves, and I think that's a good sign. And you can even go back a few weeks before that to see several very heavy volume days on some of the different ETFs, the mining stock ETFs, which really showed that pretty significant money was going into the better quality miners, and so they certainly have participated well. I'd like to mention to people also that we've had two other times like this in the last year when prices made a very good run and then turned around and gave most of it back. And my opinion is that this is going to be different than those last two, but the point is it still is a little discouraging when you see some of those hard-won gains go back, and that's why I think it's important not to overcommit once you've seen prices go where you thought they were going to go.
We're speaking with David Smith, Senior Analyst for the Morgan Report. Palladium has done a beautiful charge so far this year. Is it still a good horse to ride?
I think so. We saw that big drop about a week or so ago when the announcement of the mining strike, it would probably be over. Palladium was down about $40-some on the day, and it hasn't regained all that, but it's going back and forth, and it could even drop lower before that. But nothing has changed in terms of the supply-demand fundamentals, and I think that's where it's important, again, to get back to what we said just a little while ago, that if your belief is that palladium and platinum are in long-term bull markets, then what you're seeing over the last week or so won't dissuade you from adding to your position. In fact, you'll look at it as an opportunity to add at a lower price than it might have been a couple of weeks ago. So nothing has really changed in the big picture, but in the short term, you're going to see backing and filling until it can go about making a new all-time high, which certainly could occur within the next few weeks.
What about the labor problems with platinum?
Same story there. You know, platinum, again, is looking at the 5-year chart, has got a long ways to go before it hits its 5-year highs, but you know, it also has a positive chart pattern, and it's just as hard to dig platinum out of the ground as it is palladium, and of course the two are often found together. And
very rare in terms of where you'll find them on the planet. Russia has it, South Africa has it. Anybody else?
Something like 85 to 90% of the PGMs are found in South Africa and Russia. We have about 4% that are found in North America and 4% other. And of course, there's a certain amount of recycling that goes on, but those definitely are the two elephants in the room in terms of known supplies of it. And there are also a couple of projects in Canada that look promising, but they're going to take some years to get into the market in terms of production. So they're not really a factor now in terms of the bottom line of how much PGMs are available for the demand that's out there from a variety of sources.
I've heard there's a lot of wealthy people out there and wealthy companies sitting on a pile of cash, and that they're just looking for the right place to put it. Any ideas where they might go with it?
Well, the wealthy people in the world that are really sharp and keep getting wealthier tend to be people who don't react too often. They literally sit around and wait, just like you say, with a pile of cash until something looks like it really is a good buy at a good price, and then they commit themselves. And sure seems to me that, and I'd be surprised if there aren't some people doing it under the radar, buying especially silver and palladium at these prices in a way that doesn't roil the market. And they're so small. I mean, you know, if you consider the production of gold each year is 80 million ounces, and platinum and palladium are about 7 million ounces each, and that includes recycling. These markets are pretty darn small compared to any of the other equity markets, and it really wouldn't take very much to start tilting things in a positive direction. And I'd be very, very surprised if that isn't going on already in ways that you and I just haven't heard about yet.
Others have been calling for a return to the gold standard, not perhaps a 1-to-1 standard, but even making sure that your currency is backed up by, say, 10% gold.
That could happen down the line, but it doesn't influence my thinking at all in terms of what I want to hold in terms of the mining stocks. I think it's something that could happen, but I'm not going to base my decisions of whether or not I should own these miners on whether that happens. That will just be icing on the cake in terms of the demand side.
David, thanks a lot for chatting with us.
You bet. It's been good speaking with you today, Jim. Take care.
My guest has been David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HowStreet.com radio. You can find us on Twitter at TalkDigitalNet. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.